Let's say you just got a $10,000 windfall. No debts, no urgent bills, just you and the opportunity to make a move that could change your financial life forever. Now, here's the real question. Would you put that money into cement stocks or crypto? Sounds like an easy choice. But think again. Hi everyone, welcome to Tech Biz Insights. And for the last few years, I have traded forex and followed the rise and fall of construction material giants, especially in Africa. I've watched retail investors rush into trends and bleed. And I've seen boring cement companies quietly mint millions. Today's video is a reality check. It's not financial advice, but it might save you from chasing the wrong dream or ignoring the ringtone. Now guys, let's break it down. When you invest in crypto, let's say Bitcoin or Ethereum, you are betting on a digital asset whose value is based on the scarcity, adoption, and speculation. On the other hand, when you invest in a cement stock like Dangote Cement, Lafarge, or Bois, you are buying into a company that turns raw materials into infrastructure. Homes, roads, schools, factories. In other words, crypto is built on code. Cement, on the other hand, is used to build the world. Crypto is notorious for one thing: volatility. We have seen 70% gains in a week and 80% losses in a weekend. Come on, cement stocks. Not as exciting, but that's kind of the point. They are less volatile. Why is that? Because demand for cement is tied to government budgets, housing, and infrastructure, not Twitter drama or regulatory headlines. So if you are the type who checks your phone every 5 minutes, then cement stocks might let you sleep better. Seriously, let's be honest. Crypto has produced some insane returns, yes, especially for early adopters. Bitcoin went from $1 to $69,000 and currently $120,000. That's life-changing. Really, but how many persons actually bought Bitcoin at $1 and held to the top? But you see, cement stocks, meanwhile, have grown consistently. Take Dangote Cement in Nigeria. Since listing, it's delivered strong dividends, consistent capital appreciation, and it has remained a solid blue chip pick in African markets. Not moonshots, but stable wealth building, like choosing a very strong SUV over a rocket ship with questionable fuel. So guys, let's talk cash flow. Most crypto assets don't pay you anything unless you sell. It's all speculative. But cement companies, many of them pay. They pay dividends that's real money, hitting your accounts quarterly or yearly. Cash you can reinvest or spend if you want. It's one of the strongest arguments for long-term holders. Passive income or paper gains, what will you prefer in a crisis? The passive income or paper gains? Now, here's a big one: inflation. When prices rise, construction costs go up, but so do cement prices, and cement stock often benefit from that. They pass those costs to customers and protect their margins. But crypto, on the other hand, is often pitched as an inflation edge. So you see, guys, wealth isn't built on hype, it is built on strategy. But in reality, it tends to crash right alongside traditional markets when inflation hits hard. That's the game of crypto. Just look at what happened in 2022. Real assets like cement hold value because they produce and sell tangible goods. And in a world of rising prices, that matters. Now let's shift from logic to emotion, because investing is emotional. You would agree to that. Crypto triggers FOMO, the fear of missing out. It makes you think you are falling behind. That's the game of crypto. Cement stocks, they trigger nothing. No excitement, no viral tweets, just steady growth. And that's where disciplined investors win. You see, the greatest mistake you can make is letting your emotions drive your investments. And trust me, crypto is built to hijack your emotions. Well, another key point is that cement stocks often move in line with economic cycles. So when government announces infrastructure projects or stimulus, you will likely see a lift. But crypto, it doesn't follow the real economy. It follows trends, hype, and wealth. Hard to predict and even harder to manage. So why not ask yourself, would you rather ride on a wave you understand or try to catch one you cannot see? If you're watching this from Africa or other emerging markets, cement isn't just an investment. It's nation building. We still need roads. We still need houses, bridges, schools, and cement is at the heart of all of it. Investing in that is not just smart, it's strategic, guys. Crypto is global, but cement is local. You can see the impact of your investment. That's powerful. Now let me say this. It's not cement or crypto. It could be cement and crypto. You can do the both. But how much of each? That's the real discussion. A smart portfolio might say 70% in dividend-paying, growth-backed, tangible cement stock, 20% in select crypto plays upside potential, 10% in cash or low-risk assets. That's where you've got growth, safety, and opportunity all covered together. Now let's visualize two investors, Investor A and Investor B. Let's say Investor A puts $10,000 into Bitcoin in 2021. That was at $60,000. And then it drops to $30,000. He panics and sells. Now his loss is 50%. And let's say Investor B put $10,000 into Dangote Cement. He earns $600 in dividends yearly. And 5 years later, he shares his shares have grown by 40%. That's a total gain of around 70% without sleepless nights. See, I have seen this play out hundreds of times in real life. And I'm telling you, it's not about this flash. It's not about the flash. It's about the fundamental. So cement or crypto? The answer depends on your risk tolerance, your knowledge, and your goals, of course. Yes, crypto is exciting. Really, it's exciting. But cement is essential. One is revolution. The other is a foundation. You should choose wisely. What will you do with your last $10,000? Let me know that in the comment section. If you got value for this video, hit the like button. Subscribe for more grounded financial insights and share this with someone who is about to make a rush or a rushed investment decision.